Hey there. We are going to be diving into what the market is looking like in Portland, Oregon on June 2022. And I will be covering four major things in this video. One is going to be what the interest rates are doing along with inflation right now. And number two, how that directly kind of affects you. And I'll be running through a couple scenarios of what that might look like on the mortgage side of things. And then the third thing is we're going to be diving into a lot of data when it comes to the housing market and getting you a little bit more familiarized with what those trends are looking like. And the fourth thing is going to be a little bit more local, and I'll be going over the trends for submarkets within the Portland, Oregon area. My name is William Singh. I'm a local real estate agent here in Portland, Oregon, and let's dive right into it. So let's dive right into the inflation along with the interest rates. So just this week, the Fed hiked up the interest rate by about 0.75 percentage point. So this is a huge increase. Within the last couple of months, we've been seeing large increases in the interest rate. The main reason being is that the Federal Reserve is trying to reduce the inflation rate. Now, they have a goal of about 2%. They are strongly committed to this 2% inflation goal. Now, with inflation right now, we're currently around 8.5 to 8.6 right now. So that is a huge difference. It may not seem like a huge difference to some, but that is a huge difference. And that essentially just means that the costs of goods are going up at a very large rate. And that's just frankly an average. And this kind of varies from place to place. But one of the things to note is that the current Fed chair, who's the one who kind of pushes towards these hikes, is having a little bit more of a Volcker moment. Now, this was a previous Fed chair who had, in the 80s, pushed the rate very high and raised them very dramatically. The reason being was that we were in a similar situation back in the 80s, and we had a lot of inflation, and this was their main way of reducing inflation. Now, with that, we can take a little bit more of a, so we're in the 2000s here. We are currently at 8.51%. So obviously this is still much higher. And if we're taking a little bit more of a look back, you'll notice that in the 80s, you'll notice that we had it was you'll notice that we had high. It was so it got pretty high. Just one of those things to kind of note that it was, this is one of the reasons why the interest rates are going up, because this is the main lever for the Federal Reserve to pull in order to really put the brakes on the economy. So with that, we'll kind of zoom in a little bit more here on more recent times. You'll notice that basically back in December, that's when we start seeing these large spikes. Part of the reason why they kind of jump up beforehand Fed actually raises those rates is because of market speculation. So the Fed will release information and essentially have the market respond. So that is one of those things where they are still going to be increasing those rates over time, and we'll still continue to see rising interest rates until that inflation starts going down, and then we'll kind of see what the Federal Reserve does from there. But as you can see, we'll be starting to see much higher rates. I am not super surprised I will not be surprised if we start pushing up into the sixes here soon, maybe even sevens by the end of the year. It just kind of depends on what happens with inflation and what the Federal Reserve does and how the market will respond. Even during the 80s, you'll notice that they had a very high interest rate during this time period. I'm not sure if we'll get up to that level, but it really, again, depends on that. So as that interest rate continues to increase, the ability for someone to buy greatly decreases. So one of the things I wanted to go over is a quick calculator that I created just to kind of give you a better understanding of, okay, if we are going to be looking at these types of homes and we want to be paying this much, how much is our monthly mortgage payment? Now, I want to emphasize that this does not include your taxes or interest. So it just kind of gives you a better depiction of what it is. So if we're looking at maybe a $500,000 home, and then let's say that you're going to be, we'll even be a little bit more conservative, say 5%. So 25 grand, your total loan amount's about 475. You'll notice like if we are currently more in this 5 to 6 range in terms of the interest rate, every time you go up a percentage, we're seeing about a 280, 200 and almost $300 change in the mortgage payment. So as these rates continue to go up, and they will continue to go up until we actually hit a period where the inflation has consistently gone down for at least a couple quarters, then that's just another one of those things where if you are kind of on the fence, just know that you might get priced out of the market at a certain point, just because of the sense that the mortgage payment is going to become too expensive for you. And unfortunately, that is what it is. And as time kind of goes on, a lot of homeowners that will maybe buy now and they can buy now, they may not be able to buy in the next 6 months. And I'm not trying to spread fear. It's just one of those things that you might want to expect. So if you're thinking, hey, I have the means to buy right now, I'm just waiting for the market to crash. Even if the values do start going down, which I don't necessarily see going that way, it'll probably level off and just frankly cool down to a regular market that we've had and have some actual inventory. So we'll kind of see how that plays out. But just to kind of give another price point, let's say you're 700,000 and we'll do 10%. So you'll still see a fairly large jump. So we're getting up into once we start getting up into these 6-7%, you're seeing larger jumps here, almost between 350 to 415-ish in terms of jumps for every percentage. And just know that for every 1% that the interest rate goes up, your buying power goes down by about 10%. Now this is a rough average. And another thing to note is that the amount of interest you pay over the lifetime of the loan will continue to rise as the interest rate rises. So this is how it would really affect you. If you want to break down these costs a little bit more, feel free to reach out to me. I'll make sure to have my contact information down below, and I can also connect you with wonderful lenders that can explain it a lot better than I can. So with that, let's dive into the data a little bit more. So one of the things I like to look at is the unemployment rate. So as of right now, we are still seeing a large amount of inflation, as previously stated, but our employment rate or unemployment rate is still pretty low. So this will be something where there has been many layoffs that have happened recently, and there will be some slowing of the economy, and if not, we might be going into a recession. Now, this is one of those things where it's good to have perspective. We will always have a cyclical economy, and this is one of those things where we will see it rise and fall, and there will always be bull markets and there will always be bear markets. So just one of those things to kind of keep in mind, but for the majority of the time, they're going to be on the bull market, so that they will go down for a certain period of time, and then they'll continue to go up with a general trend upwards. And to dive into more local data, so I pulled a lot of this information from Redfin, so if you ever want to go do that, you're more than welcome to actually look at this data as well. But one of the things that I look at as a real estate agent is the months of supply. So we have been at very, very low amounts of supply, and supply is if let's say that we wanted to or stop selling all the homes, how long would that last? We have recently just bumped up to about 1 month of inventory as of for May. So you'll kind of notice like we have been fairly low since 2021, underneath that 1 month mark, and for it to switch entirely to a buyer's market, we have to be up at 6 months of inventory. We have not seen that for a while, as you can see from 2013. Even if we went up that much, that's when prices really would be starting to fall significantly, is once we really hit that buyer's market. I think that we will be seeing a cool down in terms of how much appreciation we've had. If you've looked at a 30 to 50 year time frame, we're looking at an appreciation level of anywhere between 3 to 5%, sometimes up to 7%, depending on where you live in Portland. So again, just one of those things to kind of keep in mind. A lot of people are getting really fearful, and I'm personally seeing a lot of buyers back out of the market. And to me, this is one of those things where if it makes sense for you financially and you want to be buying a home and you're looking at this from a 5 to 10 year perspective, you're saying, hey, I'm going to be in this house no matter what. In my eyes, as long as you're making the payments and it's affordable to you, that is what really matters. If it's something that is kind of getting out of your reach, again, it has to make financial sense for you and also fit your lifestyle or the lifestyle you will be living. And just know that, let's say that the interest rates do continue to climb, and you buy right now, and or they start to decline. You can always refinance if they do decline below what your interest rate is now. So that's how you could save yourself money in the future. But in my philosophy and frankly how I invest is typically more time in the market. So in general, I'm usually more on the side of it's not how much you put in, it's more about the time in the market for me. So we'll also see, we're starting to see inventory go up. So the home sales, and you can see that it's very cyclical. So it will be interesting to see kind of what happens in the fall. In 2020, it was a little bit weird in terms of uh, there wasn't really much of a cycle to it. Whereas in 2021, we saw more of a cool down. So one other factor to really consider is if it does start cooling down, let's say September, November, we'll probably see still a cyclical part of that will be cyclical downward pressure. Another thing to note is the new listings. So we've still had so this chart is 2019. So this kind of gives you a little bit more of a baseline before the pandemic hit. And we're still seeing large amounts of inventory coming on. The biggest thing that was happening during these 2020, 2021, and even 2022 is that we had so much demand and we could never really keep that months of inventory up. Once we, again, start getting past that 6 months of inventory, then we'll probably be starting to see a shift in terms of the downward push on prices. Now, one of the other thing that have watched, and as we've seen recently, we've seen a large percentage of price drops in Oregon, and this is a good thing in my opinion. We have been in an unsustainable market for the past year and a half, frankly, even almost 2 years, if you wanted to incorporate most of 2020. So for me, I actually like to see this, and it's also great relief for buyers. When I've been going out there and actually putting in offers or talking to other listing agents, I am, instead of seeing maybe 8 to 12 offers that are just giving away everything, maybe I'm seeing 2 to 4 offers that have a little bit more concession for the buyers. And I'm starting to see a shift from it being a completely hot seller's market that was maybe 2 to 3 months ago to now a little bit more. The buyers have a little bit more say, and we'll have to kind of see how this kind of plays out, but you will start to have a little bit more ability to negotiate as a buyer. And I think that we might have a little bit of time where, because of this uncertainty, you might be able to also negotiate a little bit more. So one of the other things I look at, I think we looked at weeks of supply. So again, we're still relatively low if we look at 2019 levels. We're going to need to get up to a lot more weeks of supply in order to really see a huge pressure on, or downward pressure on, prices. Another major thing that I'm looking at is median days on market. So recently, probably within the last 2 months, it's kind of changed to a certain degree, but for the most part, we're still seeing a lot of homes that are going off in the first weekend. As time progresses, I think that we will be moving a little bit more towards higher median days on market, so that way it's going to be maybe 2 to 3 weeks that a house sits on the market. Remember that we have been in a crazy time in terms of the market for the past 1.5 to 2 years. The reason being is that it's not normal to have houses go in a weekend. And sellers are going to really start seeing this, and you need to really set your expectations to say, okay, maybe if it doesn't go in the first week, it might take a second or third week to actually have it sold. Again, make sure to talk to a listing agent and have a better understanding of what those expectations should be, because it might change based on your location. It might be, or it might change also based off of the quality of the home, many other factors. Feel free to reach out if you ever have questions about that as well. Again, contact information below. If you found any of this content helpful as well, it would be awesome if you could like and subscribe. It helps out my channel a lot. And let's dive on to the next thing. So this is another thing that I look at in terms of demand, because of the fact that the average month or average monthly rent versus the average monthly mortgage payment. Now, the monthly mortgage payment doesn't always include the taxes and insurance, but is a good indicator to see, okay, now that the interest rates are increasing, it's actually cheaper to rent. And this will kind of force a certain level of the population or portion of the population to no longer really be able to buy a home. So I think we're going to see a little bit less demand from this. I believe about 15% of the first-time home buyers, based off of a study off of the National Association of Realtors, so that 15% of first-time home buyers will probably be priced out of the market, and also because of the interest rates, that's kind of pushing them out of their financial ability to do that. So we just dove into a lot of data. If you have any questions whatsoever with this or any comments on like what you think, feel free to leave those down below. And we will be diving into the local data now. So with this, this is a report, an Altos report that I pull, and gives you a better idea of what the individual market does, because Portland has a lot of different submarkets to it, and it just kind of gives you a little bit better idea. So the 5 things that I usually look at is going to be this median list price. So it does still seem to be kind of ticking up. And then I'm also going to be looking at the median days on market. So in here, it would look like it takes about 14 days in order for the house to be off the market. And then the third thing is going to be this price decreased. So we're seeing a general uptick on this, which is kind of what we're expecting as interest rates rise, and there's a correction in the market. So with this, we'll also be looking at another major indicator, which is this fourth one, which is inventory. We're finally seeing inventory go up. There's at least 1,000 homes, which is fantastic. Again, we have to get up to maybe 2 to 4 months of inventory to be more of a standard Portland market, and up to that 6 months and above in order to be in a complete buyer's market. So with that, the last one is the market action index, and this just kind of gives you a better feel in a quick glance of, is it more of a seller's market or is it more of a buyer's market? And with that, we are here at the 82 mark, and Portland, it's actually cooling down quite a bit from last month. Now, diving into a little bit more on the west side, we're going to be looking at Beaverton. It's still fairly competitive. We're at a 91 for the seller's market. The median list price is a little bit higher. Yeah, so a little bit higher. The median days on market is about 7. So these are going in a weekend essentially. And we're seeing price decreases. They're kind of leveled out for the most part. So again, we're seeing a level out of price decreases in Beaverton, which is completely different from the Portland market, which we're seeing closer to 36%. So again, submarkets do change. And the inventory we are starting to see is still finally going up, or is finally going up. Now, the market action index is going down, which is good, and I have a feeling that over the next couple months we'll most likely see more inventory come on, and we'll be seeing this number kind of start going down. Now, Hillsboro is a little bit further out west and is a little less competitive. There's also, actually it's almost, yeah, so it's a little less inventory actually. But the median list price is a little bit higher. And again, when we talk about the urban growth boundary, usually you'll see like in Hillsboro, this is where a lot of the new construction happens, a little bit more on the bigger sized of homes. and we're looking at the inventories rising along with the price decrease. So that's going down a little bit, but not too much. Again, very similar to Beaverton. They typically mirror each other for the most part. Tigard, on the other hand, we are at 97. So this is one of those things where inventory is still fairly low in this area. We're also seeing a little bit higher of a median list price. So just something to kind of keep in mind. And then for Lake Oswego, so Lake Oswego obviously is or maybe not obviously, but typically is a little bit more affluent. And you'll see that the median list price is much, much higher. And then the median days on market is about 3 weeks, essentially. So again, I'm not super surprised because of the price point. You're going to have less buyers, and this is pretty standard. We're seeing about a level off for the inventory. It's maybe going up generally in a slightly more. And then the market action index looks like it's starting to go down. So Milwaukie is going to be similar to Hillsboro in terms of the price point. And we're looking at this median list at 548. And we're also seeing that the median days on the market it jumped up to 14. So this is another indicator to me that there's going to be a little bit more inventory coming on. And we're seeing a price decreases actually kind of high or similar to Portland at 35%. Inventory again is going up, and as you'll see, most of these are the market action index is going down. So then we'll finish up with Gresham, and this looks like the median price is kind of leveled out for the most part. We're seeing a price decrease is very similar to what Portland's looking at. The median days on market, there's a lot less competition out in the Gresham area. So that's if you're looking to buy maybe something that's a little bit more affordable, then Gresham might be a good place to take a look at. So with that, we'll look at the market action index, and again, it's starting to head down. So as time kind of progresses, we'll definitely see, in my eyes, we'll most likely see these market action indexes decrease, and we'll kind of see how things play out. But in general, I'm thinking that the prices will most likely level out for the most part. The interest rates will continue to rise, and we'll start seeing more inventory come on the market. So that's great for buyers, and for sellers, you're going to really want to talk to an agent and see whether or not it makes financial sense for you, along with also if it fits your lifestyle to be making that transition now. So just one of those things to kind of keep in mind, that it does depend on your situation. Thanks so much for watching. If you have any other questions, feel free to reach out. I'll make sure to leave my contact information below. And thanks so much for watching.